Hey guys, what is going on? Welcome into the video. So in this one, we're going to be taking a deep look at the technicals of the stock market as a whole and talk about some major technical and fundamental risks moving forward. We're going to go over some important catalysts ahead of us and then some individual stock trade ideas for the week ahead. Let's go ahead and get on into it. So taking a look at the S&P 500, it finally broke out of this 3-week long consolidation range and is now pushing for what looks to be the next leg higher. It's also now testing the major trend line that has resulted in tops during each rally this year. Now, if it is able to push and close above this trend line, it would technically be a major breakout, but have caution here in my opinion. For weeks, I've been talking about a scenario that I believe has a great chance to play out, and that is a breakout of the trend line, which turns into a false breakout and a violent sell-off to follow. I like this scenario a lot for a few reasons. Number one, bear market rallies trap as many buyers as possible before selling back down. Everyone in the market is watching this obvious trend line, and a break above would be an obvious buy signal, of course. A bunch more buyers would come in if the SPY breaks out here, and the reason why false breakouts are so dangerous is because all of those breakout buyers would end up selling their positions if that breakout ends up failing, which makes a short squeeze type effect, but the straight opposite, aka to the downside. Number two is a ton of fundamental risks we have right now, and I believe the market is not pricing in these risks correctly. We'll talk about some of these more later in the video. And number three is we also have a pretty major bearish pattern forming as well on the S&P that we will take a look at in a second. So we could see that major trendline breakout and then see the bearish pattern play out, which can support that false breakdown thesis. We will see how this plays out, of course. So on the SPY, after that major trend line, the key resistance levels that I have above are at 411, 415.5, 417.5, and then 420 above there. These are all major spots where I would not be surprised to see this rally peak around and then potential top form from there. The important bearish pattern forming that we were talking about is shown best on the S&P futures chart, and this is a 2-month long rising wedge pattern. So rising wedges are bearish reversal patterns, and it will look something like this if it plays out. Also, something important to note is the longer and larger a technical pattern is, the more likely it is to play out, and the larger the move will be when it does happen. We talked about 3 major upside levels to watch on the futures chart last week, and those are 4110, 4150, and then about 4202. 4110 is the level that triggered the head and shoulders breakdown back in July, and no surprise where the S&P topped this past week, right at that 4110 spot. So if it breaks above 4110, that can start the next leg higher for the S&P, and I have 2 major supply zones close above. The first is at 4150, and that extends to 4175. 4150 is the spot that started the major sell in early September, and the wick above there is used to make that supply zone, which extends all the way up to 4175. And same type of zone above there at 4202, which extends up to 4217 from that candle wick. If the market does see some more upside in the short term, these are the next major zones that I'm watching for a strong rejection at to give hints on where the market would be headed next. Now, in the scenario that the market sees downside in the short term, the key support from here is at 3997.5, which is super important to hold for the bull case. As long as it continues to hold, bulls are well in control of the short-term trend, but if it breaks below, we can see a move down to 3940 to 3950 next, which is the last chance support area. Below there would start a major sell-off. The reason that these levels are so important is that 3997.5 is the spot where the breakout was triggered during Powell's speech this past week. If it breaks below here, that would indicate it being a false breakout and start downside to the next support, which is that last chance level, the 3940 to 50 spot. If I was to lay out my short-term expectations of what comes next, I think that it is most likely to see some further upside in the short term. Above 4100-ish breaks out of that key long-term trend line, which would likely lead to a 4110 break and send it to that supply zone above. If something like this plays out, it'll be around that overhead supply zone going into the major catalysts on the 13th and 14th of December, which if anything goes wrong during these catalysts, the market will be set up for a violent sell-off in my opinion. The week after next is going to be a super important one as we have the CPI data release on the 13th and then the next FOMC meeting on the 14th. We'll go over these events more in depth next week along with a bunch of tradable scenarios, so make sure to stay tuned and ready for that. Last week we also talked about the patterns that are forming with the VIX versus the S&P. Here's what it's looking like updated after last week. This setup looks a lot like the rally that took place between mid-June through mid-August, where the S&P is set up in a rising wedge versus the VIX in a falling wedge. When these patterns broke, that is when the next sell leg started. So these are some very important patterns to pay attention to right here. And at the end of the day, the VIX is telegraphing that there is very little fear in the market now. And on this recent downtrend, it is oversold for the second time on the daily chart, which has not happened for 4+ years prior to this. Essentially, what this is telling me is that the market is going to be caught way off guard if any surprising negative news hits the market. And when the market is positioned like it is now, that is when things can get ugly again very quickly. The reason that I'm going so in depth on these S&P 500 charts is because it's essentially the gauge for the market as a whole. There's of course always stronger stocks and sectors than others, though chances are if the S&P is bullish and going up, long trades and breakouts will work and follow through on the individual stocks. But if the S&P is bearish and headed lower, there is a high chance that long trades and breakouts will fail. So paying attention to the indexes kind of lets you know whether you can take risks on long trades or whether you should be cautious and the likelihood that breakouts will end up failing. Now going over the major fundamental risks to the market moving forward and why I think we have more pain ahead are: number one, stocks are climbing a wall of worry right now. Some might remember 2020 where it seemed like stocks were climbing a wall of worry all year, but the major difference now is the Fed and rates are not in the favorable monetary policy for stocks. Number two is earnings reports are going to get much worse from here moving forward, and analyst estimates are way too high right now. If we have an ugly recession, we are nowhere close to where earnings could end up being at. Number three is the market is already pricing in bullish developments in inflation and the Fed. And while I do think it is likely that both of these scenarios improve for the market moving forward, but the major risk is if there are any surprises, which could easily happen, the stock market will not be prepared, so there are a lot of risks to these. And finally, PE ratios are historically expensive versus where real rates are at. This chart lays out well where these valuations are currently and the risks that we have in that sense right now. If there are positive developments in fundamentals, technicals, etc., I'm more than happy to change my stance and I will always be bullish on the stock market long term. But in the short and midterm right now, my lean is currently bearish. I was bullish for a rally near the recent lows, and over the past 3 weeks or so, I've been talking about how I expect more upside in the short term, but overall I do think this is another bear market rally, and we reverse back down around mid-December. So far that has played out, and we will see what plays out next. Alright, so now taking a look at a few individual trade setups and ideas for the week ahead. First up, we have DraftKings, ticker symbol DKNG. This stock is right on the verge of breaking out of its downtrend channel that has been stuck in for more than 3 months. This can be viable long above 15.8 with a tight stop loss below for a move towards above targets at 17.25, 18, and then 19.8 above there. It is also right on the verge of breaking above the 200-day moving average for the first time in over a year, which lines up with that downtrend line. Next up is Enphase, ticker symbol ENPH. We've talked about this stock a bunch in recent videos, as it continues to be one of the strongest stocks in the market. On Friday, it finally broke out of the 3-month-long inverted head and shoulders pattern above that 320 to 325 zone of key resistance. Watch for that zone to act as new support if it does retest, as this stock potentially starts its next leg higher. Finally, I feel like we talk about this technical setup on Apple stock every week now, but like I've said before, this may be the most important trend line in the stock market. It's in a major multi-year bearish head and shoulders pattern, and zooming in, it is also building out the right shoulder in this shorter term head and shoulders pattern as well. There was also news out this weekend that Apple is moving production out of China. This is a major news bomb, as China accounts for near 70% of iPhone production, and this move will not be a quick process, of course. We'll see how the market reacts to it this week, but man, look out below if that trend line breaks down, because if Apple goes, so does the market, and it could get ugly out there. So that is it for the video, guys. Hope you all enjoyed, and hope I provided some value to you. If so, make sure that like button and subscribe button helps me out a lot, and I would greatly appreciate it. For anybody interested in joining the private Discord chat to get my personal trade alerts, that is the first link down in the description. Good luck trading this week. I will catch you all next time. Peace out.